Hi, this is Optimus Futures, and we're back with our weekly roundup of key commodity and futures markets for our viewers. As always, please let us know in the comment section below if you have any questions relating to the analysis we post, and if you have any comments relating to how we can improve these video sessions for you. So this week's analysis, we're going to begin with the S&P 500 E-mini futures market because this has been a really interesting market to follow in the prior week. So this is one market that we've been studying for quite a bit as a market that was actually over the past few weeks transitioning from a very strongly and predominantly upward trending market into a more sideways market with a lot of up and down choppy movements, as you can see here. So we have a lot of these swing points, these mini shorter term swing points being created in the market, and we were talking about how market could possibly be not rounding off but possibly preparing for a pullback, a deeper correction, which has been due for a while. So essentially where we opened the prior week was right around here, which was again at an interesting location. We were obviously sitting bang on top of this horizontal support and resistance level, multiple occasions where price held a support here. We had a fake break of the level earlier on, and price just sort of obviously trickled right back up and moved very, very strongly up. The interesting thing about the move over here was that we were able to basically pass this box with little to no resistance. We had a strong close above the level right around here. It turned out to be a fake break. As you can see, price sort of just trickled right back underneath. We discussed in the prior week's video that price had sort of pulled back to this area, held its resistance, and continued its way down to close strongly. This week, however, we sort of opened right at this level over here, and price just held here literally to the tick and bounced right back off. We did momentarily hold here as resistance, and price eventually was able to push through. We did not see a typical rounded pullback and continuation motion that you usually expect of price as it breaks through levels like these, especially sideways levels like these. But it was just a really, really strong move, and you can see that even push right past these more important longer term swing highs over here. I think this is kind of like the old time swing high for this market. We were able to just push through with rather ease. We did see a pullback thereafter. Price sort of pulled back, created a very nice looking bullish pin bar, you can say a bullish hammer candlestick pattern, and was just able to strong really closely on a new high for the week as well, which is really interesting. So literally to sum up the price action that we witnessed on this market the prior week, the bulls have just been very, very strong, which is nice and refreshing to see, given that over the past few weeks the market's been rather indecisive and choppy in a wide range. And while the market was chopping around, we did talk about the market maybe eventually trying to push to the 2600 level, which we saw price hit right about here the last week, and so we're pretty much sitting at the 2600 level right now. It is still pretty early to say if the market's going to be bouncing right off of this area and sort of just trickling back down into these levels and sort of just creating more momentum towards that longer term, rather a midterm correction that we've been talking about for a while, or whether price is just going to continue to resume the long-term uptrend. The momentum this week has been very, very strong, but given that we're pretty close to the year end now, we're heading into December soon, these are usually good times for markets like these to kind of just take a breather and pull back and sort of post those much needed corrections before the market can resume their strong trends with the beginning of the new year. So with that in mind, we wouldn't really have a long-term bias for this market just yet. The price action here has been interesting the prior week, and given the fact that we're at the 2600 level, given how the market sort of reacts early on the next week, we may see prices continue its upward momentum, which would be typical of this market. But we would be watching for any sharp movements up and sharp movements down, sort of the spike that we talk about in prior articles as well, in prior videos. So action like this, where we see a very sharp move in one direction, and the market just tips over, and we see the market making a move in the other direction just as sharply. These are usually very good indications of fake breakouts of price levels and important round numbers. So at the 2600 level, if we see action like this going on, we would have more evidence to suggest that the market really could be using the 2600 level as a launch pad for a midterm correction. But that really remains to be seen based on how the market unfolds in the following week and weeks to come. But just looking at this momentum here, it does look strong, and if we just see these mid-range normal looking candlesticks continue to print with higher closes, we may just see the market sort of continue with the uptrend here, because the good news is for the bulls that we really passed a lot of the mess that we've been posting in the prior weeks. So these, such as boxes like these prior highs, were really just ended up closing at a new high for this market for the week, which is really interesting, and sort of just paves way for more buyers to come in the market as the market opens next week, as far as the long-term uptrend status of this market is concerned. So the next market we're going to be looking at here is a 10-year Treasury no futures market, and this market for the prior week was sort of not very different to the weeks that we've witnessed in the past, which is basically just the market continuing to sort of consolidate and chop around and box around important short to long-term support and resistance levels, and that's kind of been the theme right throughout prior week as well. So the market was sort of just oscillating around the 124.50 mark over here. We do have evidence of some support and resistance off of this level, and really this price has just been off on and off this level quite a bit in the past. We've had evidence of support at this level, price pushes through, pulls back, held as resistance, once again doesn't really take off into any kind of a decent trending motion, and sort of just pulls back off of this support level over here. Once again we get the market sort of closing above this level, once again losing momentum, really no steam at all, prices sort of pulls back to this level, and that's kind of where we closed for the week. Once again, absolutely no reason for us to. So as of now, we really do not have any kind of a bias in this market, but we do believe that this market is sort of just wedging out and tightening into this area over here. We could see the market sort of just continue to oscillate around this area and eventually prepare for a breakout to either side. Again, that will really just depend on how we see the market action unfold. We do have a very, very interesting level sort of being created over here, marked with all of these highs in here. So we do see a breakout to the upside and sort of a pullback to this level, and we see a really good candlestick pattern or other forms of confluence here, such as moving averages, and of course we have the 125 on round number over here as well. This could really amount to a very good location to look for a wedge pattern breakout to the upside, but again, that would really depend on how the market sort of unfolds as we go into the following weeks. But for now, we do expect the market to continue to just chop around and be indecisive until it sort of just breaks one of these longer term trend lines that create the wedge pattern on the market. So the next market we're going to be looking at is the gold futures market, and like the last market we're discussing, this market has also been rather indecisive in the recent past, and that theme sort of once again continued in the prior week as well. We opened the week around here, and which was actually right above this horizontal resistance level in the past. It did not turn into support much. We did hold for a couple of candlestick patterns on the 2 hour, which is like a 4 or 6 hour hold up, and then prices sort of pushed straight through and fell hard into the support level over here. This is sort of very typical price action that you would expect in a sideways market, where price will sometimes just use these really short-term swing points and minor support and resistance levels for really really strong short-term moves, and other times you'll just see price pushing through even some of the most important support and resistance levels like really easily, which is kind of where a sideways market derives its bad reputation of being unreliable and just a hard market to trade. So just by looking at the price action we had in the prior week, you can see that that sort of just gets demonstrated here. Price falls extremely hard into this level. Ideally, you would have probably expected price to maybe push down to this low over here, but sort of just bounced off of this area over here. Once again, the action wasn't really smooth. We bounced off, lost some momentum, pulled back. Out of nowhere, we see this really strongly closing a really decent sized bullish bar. Once again, price loses momentum again as we see some red candles pulling back into this bar, and then boom, off we went all the way to almost a swing high over here. We did not exactly make it to this level or past this level, and that is really where the market sort of closed for the week. As far as a directional bias for this market is concerned, it would really help for us to look at the daily time frame for a clearer picture. We need to definitely resize the chart for a better view of what's going on. Okay. So on the daily time frame, you can clearly see the choppy mess that we've been talking about on the lower time frames. Once again, on the daily, that gets printed as literally one bar up, one bar down, spikes on either ends of candlesticks, which is just typical sideways action and indecisive price action for this market. So essentially, what we have going on here is that price has had a hard time trying to even hit this low over here, which is again a very important longer term swing point, swing low for this market. Price really hasn't been able to hit this level. It sort of just bounced before it, and after that we've just had price trying to push through to maybe test this level, but all attempts have really failed really drastically, and we've just had price sort of going nowhere just above this major swing low over here. The important thing to know here, however, is that we're really approaching a very important longer term resistance level over here. We have extremely strong evidence of resistance off of this area, some support, and obviously more resistance. So if really this price continues to chop around up and down, but eventually sort of just drag into this area, that this is really where we would be more interested in seeing what price will do as it hits this area. We obviously have the 1300 round number lining up just underneath the level as well, and that sort of explains why price has been so indecisive in this range over here. So at the bottom end, we have the swing low creating massive support for price, and we have this ceiling, this resistance level over here in the 1300 round number that is really just creating this intense battle between bulls and bears within this tight range over here. So that really seems to be the longer term theme for this market. And just looking at it, until we see price hit either the 1300 level and this bigger resistance area over here, or we see price eventually sort of dragging down and hitting this level, we really aren't much interested in the price action on this market. So that sort of also explains our short to midterm bias for this market, which is that we expect it to continue to just chop around a little bit until we get to more decisive locations for this market. It was going to be either the support area over here or the resistance area over here. Okay, so the next market we're going to be looking at is the light crude oil futures market. We had the market open at a very interesting location last week, which is right around here, right next to this sort of high over here. We can really even classify it as a box around here, which sort of acted as a more rounded off top for the market, a short-term top for the market. So essentially we just opened around here. held as resistance around the lows that we had in the box over here. The market pulled back, held literally to the tick at these former highs over here, and just bounced off really strongly. We've been talking about the bullish strength of this market, which has been really impressive over the last few weeks, and that theme sort of continued this week as well. This really was a week that belonged to the bulls, clearly. We had a very, very strong uptrending motion on the market. Importantly, we did not see any kind of major holdup as price sort of, went past the territory of this this box we had over here. You can see that as soon as price bounced off of this area, we had an initial sort of pullback off of the highs printed earlier in the week, as well as the consolidation box we had to the left over here. But really, it didn't amount to much at all, and price just continued and swiftly just ran through this area. Once again, held as resistance only slightly at the top of the box. You can see the holdup over here. We even had a couple of candlesticks printing some kind of selling, but really the close was still very bullish, and the market just continued its way up for the entire week, and again closed very strongly. So another market that we get a really good perspective if you look at the higher time frames, which we're going to do in a second. So there we go. Now we need some more perspective. So there we go. We've been talking about the bullish trend of this market right from the point when the market, when price sort of broke out of this resistance level. We talked about all the consolidation underneath the level and how price was sort of gearing up to break this level. And then again, the fact that price was able to obviously push past this level as well, which is an extremely important longer-term swing high that created a really important bounce, a really sharp bounce off of this price level. You can see that we had almost no resistance at all at this level. We did see a candlestick with a spike to the upside and a bearish close, but really nothing else at all. We see price just pushing extremely hard past this level. And importantly, right off of this level, this really longer-term swing high over here, we had a bounce as price pulled back to this level, held as support, and just since then it's really been all bulls all the way through. And importantly, last week we were able to close not just above this former shorter term swing high, but also the longer term swing high was sort of lines up with this shorter term swing high. So essentially we've been able to close very strongly above this all important level over here. And really, depending on how price behaves when the market opens Monday, if we see a sharp pullback or maybe even a slow round of pullback to this area, we see price hold the support and continue its way up. We could well be looking at a more sustained upward trending price action on this market for many more weeks to come. So yeah, and that sort of even highlights our bias for this market, which is going to be to the upside in the short to medium term. Okay, so the next market we're going to be looking at is the Euro futures market, and if you notice, we're going to start right off the daily time frame here, because this is a market that we've been following on the higher time frames a lot, primarily because we had a very obvious head and shoulder pattern develop here that really didn't amount to much. It was kind of disappointing to see this fail so badly. So essentially, we just had a very bearish head and shoulder pattern print here with a neckline as shown with the horizontal green arrow. We were able to close strongly below this level over the past few weeks. We pulled back, we held as resistance as price was able to print a bearish engulfing candlestick pattern. And as price sort of pushed down, we were expecting the market to, sort of trickle down to the 1.14 level towards these former highs and lows over here that create a support and resistance level around the 1.14 area. But unfortunately, the fickle nature of the markets came into the way, and price sort of just lost momentum out of nowhere and sort of pushed back, not only for a pullback to the level, but sort of just very, very strong close above it. Importantly, price pulled back as support at the former neckline and this horizontal support and resistance level, and we held a support in the last 2 days of the prior week. We had very strong bullish action, sort of just confirming that the bearish head and shoulder pattern seems to be null and void now. But that said, we need to be careful of the fact that even though we do have some very strong bullish action here, and the fact that the bearish head and shoulders pattern is sort of negated and null and void, this sort of speaks volumes about the bullish trend that the market has been in. Obviously, we've been in a long-term uptrend, and it could well be that we're sort of just resuming that uptrend, given the fact that we're almost through this level here. So instead of bearish head and shoulders pattern, if you just throw in a flag pattern here, you'll see that we've sort of just broken out of this flag. We pulled back, held a support, and now price is continuing its way up. So even though we do have evidence to suggest that the bulls could be strong in the weeks to come, we cannot ignore the fact that we're sort of sitting at a very important horizontal support and resistance level here, marked by the base of the head and shoulders pattern, as well as the two shoulders. So essentially, we're sort of just sitting at this very important horizontal support and resistance level, and also the 1.2 round number, which is something that we're going to be extremely cautious. And once again, price is sort of just heading into a high here. Not the ideal location to be looking for aggressive buying, but yeah, we do have evidence here to suggest that the market could continue its way up, although we're not really putting any kind of bet on that, simply given the fact that we're at a very unfavorable location to be looking for strong buying to come into the market. However, if we do see price sort of just drag over to the highs over here, and we eventually in the weeks following we see something like this develop, then yeah, we do have a more reasonable expectation of the longer term uptrend theme to resume from there on. But for now, it's just a market that's in our watch list for sure. We want to see how price does at this level here as the market opens on Monday, whether it's going to pull back down over here, or we're going to see a strong close, a daily close above this level, maybe a pullback as price holds at this level and continues its way up. That certainly would be a good indication for perhaps some more bullish activity to come for this market in the future.